Who's with us today? Liz McDonald, EMAC as always. Scott Martin and John Layfield also chiming in. John, we'll get out to you in the Caribbean. I said to Scott earlier, is volatility the name of the game from here on in?
I think it is for the foreseeable future. Volatility started because of technical fundamentals in the market, not necessarily economic fundamentals, but I think it was going to happen anyway. I think growth, portends higher interest rates, higher inflation, and I think that's what people are focusing on right now with the volatility. The inflation number itself was 2.1%. You take out energy, it's only 1.8%, so it's underneath that 2% market. But you have so many stocks out there reporting that higher commodity and food inflation has impacted their bottom line. Nothing has changed in the overall global economy, though. You still have low rates, low unemployment, and still low inflation for right now. So I think the market's going to be okay, but I think that volatility will be here for a while.
What about these Treasury bonds, Scott? There was an article, I think it was on MarketWatch this morning, I was reading. It was interesting. You were saying the one-year Treasury bond 2 years ago was 0.2%. That's how much you got back if you invested, if you bought that bond. Now it stands at 2%. And for those people who have cash and are a bit leery of stocks right now, that is an attractive proposition. So some of the money that would be going in equities is now going into fixed income.
Yeah, CD rates, too, actually, are going up on the way in. I saw a CD offer for 18 months for over 2.5%, which I haven't seen in many, many years, And that's the interesting thing. That's the struggle that's going to start happening for stocks is as these rates start to balloon up, what's the competition there? And that is these exact interest rates, as you pointed out. So what level are we looking at for maybe the 10-year or the 30-year? Probably higher from here before it directly impacts stocks. Yes, as John pointed out, it has added volatility. But as you know, we've seen sell-offs like yesterday only to rebound so far today. So to me, we need to see a pretty dramatic rise in the 10-year, say to 3.5%, 4%. Right. Before we see it directly pull back the market here.
All right, as we mentioned before, I want to get to this, Lizzie. 3 stocks responsible for half the gains in the S&P 500 this year. They are Amazon, Microsoft, and Netflix.
Yeah, they're responsible for 48% of the gains year to date. So, what's interesting is, are these the go-to stocks now? And when, as we were saying earlier, the market falls out of bed. Amazon is trading at like 320 times earnings. Wow. It's the most profitable nonprofit. So, is it papering over weakness in other sectors? We know consumer discretionary is also up year to date, but the energy sector is still in pain despite oil at, 3 or 4 year highs.
All three, again, up today, Lizzie. Thank you.
Yeah.
Rough week for Walmart shares for sure. On Tuesday, the stock had its biggest one-day drop since 1988. Scott, let me go to you on this one. Do you own Walmart, and is this a buying opportunity in your mind?
We've started picking at it, Ashley, and I still like Walmart's growth story. I still believe that the world is big enough for a Walmart and Amazon, and probably a Costco, too, which we own. We own COST. But Walmart, we started to pick at here yesterday, and we'll continue to do so because I think the numbers, yes, were a big disappointment a couple days ago on the earnings side, but they did have a couple prior quarters that probably made these numbers look worse.
Right.
So the overreaction to me was to the downside in Walmart. And so, yeah, I believe that it's going to push back towards 100 here, and we started adding to it.
And, John, Scott makes a good point. It was about online growth. It was like 50% in the prior quarter. This time it was up 23, 24%. I mean, OK, it's a big miss from the previous quarter, but still heading in the right direction. Was the sell-off a bit harsh?
I think it was, yes, because projected at 40% growth for the coming year as far as online growth. And I think Walmart is doing the right things. They've already got a model of 1 hour delivery that they partner with JD.com in China. They have about 10% stake in JD.com. They have 1 hour delivery in most Chinese markets. They did the same thing with Rakuten in Japan. The Flipkart potential acquisition, they're probably going to get about 40% of it. It's the largest online commerce, e-commerce in India. I think Walmart's growth story, fighting against Amazon, I think is still there. I've owned it for some time. I'm still very bullish on Walmart.
The costs are still weighing on it. It still has the worst operating margin in its history, 3.3%.
Okay.
And it's now launching that, new specialty home shopping, home furnishing division to attract higher-end
All right,
shoppers.
see if it works. Quick check of the big board right now. Higher profit at Avis. Take a look at what that stock is doing. The Dow itself, look at this. Suddenly off to the races.
Yeah, look at that.
Up 177, 179 points. Very close to getting back to 25,000. We'll be keeping an eye on that. Up 0.75%. We mentioned higher profit at Avis. What's that doing to the stock? Yes, it's helping big time. Up 12%, nearly $4.50 at 43. Cheesecake Factory. Revenue falling short, though. Doesn't seem to bother the stock, though. Up another nearly 4% at $48 for Cheesecake Factory. Hormel boosting earnings guidance on tax outlook. Hormel makes Spam.
One of Stuart's favorite.
One of Stuart's. Stuart has his childhood was pretty much formed by Spam. Mine too. Hormel, though, down 2%. Roku shares down after a weak forecast. In fact, big down, down 21%. Roku right now at $40, down $11. Higher revenue, though, at Pandora. They're having success with getting more subscribers. Kind of a dud on the stock today, though, down 19 cents, down 3% at $4.64. This is interesting. A Koch brothers-backed group started an ad campaign aimed at dissuading local governments from basically lavishing Amazon with taxpayer-funded benefits to win Amazon's much-talked-about second headquarters. John, I have a feeling, although in theory they may be right, but, you know, the opportunity to get Amazon, 50,000 jobs and everything that comes with it, I don't think the cities are going to be listening to the Koch brothers anytime soon. What say you?
I agree with you. It's the Koch brothers' money. They have a right to do this, but I don't think cities are going to listen. Look, cities have the opportunity. And remember, we're getting tax breaks. They're getting tax breaks on future revenue. They're not getting money from most of these cities. So this is revenue that the cities wouldn't be getting anyway. You got 50,000 jobs in this Amazon headquarters in perpetuity. You've got one of the greatest companies in the world located in your town. People are going to bid for this like crazy. I think this is what should happen in the country.
Scott, very quickly, if you're mayor of Scottville, would you give the farm away to get Amazon in your backyard?
You actually just gave me an idea to run for mayor of Chicago because the guy here isn't exactly that popular. So sorry about that, Rahm Emanuel. I'm throwing my hat in the ring. You know what, though? I disagree with you guys. If you look back at some of these deals that some of these cities have made with automakers, manufacturers, they don't get the tax revenue back that they're promised or the revenues or the production from some of these companies. So a lot of these cities and states get taken advantage of. So I would be careful if I was making a deal with Amazon here. That's all.
Interesting. Thank you, Mayor-elect. Twitter facing backlash from conservatives after the company made moves to curb automated accounts. Now, company conservatives claim they are being unfairly targeted by the company. The question is, do they have a point? This was a big issue yesterday. Some of these Twitter follower accounts were purged.
Yeah, here's one side of the story. Twitter is saying you got to prove you're a human being following that with a follower. If you have a follower, that follower has to have a phone number, or your account has to have a phone number.
Right.
And if you don't have a phone number, we're going to purge you. So there was one individual can post multiple times to multiple accounts with one phone number. You have to prove you're not a robot. But the other side of the aisle is saying, wait a second, you're kicking us off for our views. That's what some conservatives are now saying. And in fact, separate from Twitter, Prager University is suing YouTube and the parent for illegally, they say, censoring some of its content on YouTube. So this is a problem across social media. Are conservatives being treated differently?
Interesting. Stock down slightly today on Twitter. Talk about gee whiz. NVIDIA is partnering with A1 developer, or AI, I should say. It looks like A1. AI, artificial intelligence developer AnyVision. They're going to be working on facial recognition for smart city surveillance. Company, Big Brother, all over again? What do you say, John?
Of course it is. There's nothing you can do about it. Look, Kasparov has been fighting this machine since the 90s and unfortunately lost. He was going to lose eventually anyway. But look, Google has 50 of the top 100 global scientists in AI working for them. This is the future. It is Big Brother, yes, but nothing you can do about it.
Yeah, but cities better have privacy protections because that's an amazing treasure trove of data to hack, right?
But I say, Scott, if NVIDIA is getting into it, you know it's the future, right? Because they've been very successful.
I mean, you put this next to their gaming dominance, Ashley, and it's a reason to take a look at the stock here. You know, we've been waiting for NVIDIA to pull back, and it did during that big kind of sell-off we had in February. It didn't stay down very long. In fact, the stock got treated terribly after a really good earnings report. So we're looking to add to this one just lower.
All right. Very good. John, thank you so much. You go back to the beach. Scott, thank you. You go back to your mayor campaign. Thank you for both being with us today.
Yeah, it's 30 degrees here. Come on, John.
Vote for Scott.